I'm Charlotte McLeod with investingnews.com, and here today with me is Omar Ayales, who writes the Gold Charts RS newsletter. Thank you so much for being here. Great to have you.
Thank you. Glad to be here.
Really good to be with you once again. We're catching up at the New Orleans Investment Conference. I feel like this is usually where I see you every year. And I wanted to start, we've made it almost to the end of day 3, and you've been on a panel, you've been out on the show floor. Can you talk to me about sentiment among the attendees? Any key takeaways so far?
Well, the energy is great. I think it's been a great event. In the many years that I've been coming to this event, I think, this is, one of the ones that I've seen the best attendance or the strongest attendance. After the year that gold has had, I think it's very normal for everybody to be super bullish, super high on gold and silver. So, the energy is great. And also, it's funny, you can tell it's been a great year because in day one in the exhibit hall, Brian had a carnival. So carnival people came in, and I remember, like 20 years ago, I came to like a conference here, and they had a similar theme, and it was kind of like related to the strength in gold, and so that's also a telltale sign, and it's been fun. The energy's been great.
Okay, so good energy. I'm also noting a lot of positive sentiment around gold. How are you feeling about the metal? There's a lot of talk about this run up that we've seen. We're in a bit of a pullback right now, and I'm hearing a lot about how this is going to be a brief pullback, then we'll resume the ride upward. What are you seeing in terms of that?
Well, I'm a little bit more skeptical. Last year when we sat down, for this interview, we were super bullish, and I was saying that like the risk really is to the upside, and like it's more risky if you're not in this trade than if you were in the trade if you're not. I think this year that's not is not that clear. Gold has risen nearly 100% in a year, and after it had a really good 2024 year as well, and like it is normal price action at the end of a cycle. But then also what happens at the end of the cycle is some consolidation. And, I wouldn't be surprised if we enter into some consolidation. Yeah, like we were chatting a little bit earlier, and, one of the telltale signs for me is the fact that the US dollar index is not really falling more. We've seen it weaken since the 2022 peak, inversely proportionate to gold. But in the more recent rise of gold to new highs, we didn't see the dollar fall to new lows. And that tells me that the dollar has maybe a stronger base than what people are expecting. And eventually that could put some downside pressure on the metals and, and maybe foster this consolidation.
Yeah, I think it's good to take a look at that viewpoint. And I do remember from last year and from previous conversations, we've talked about how gold moves in these cycles. And I think you were talking about a top in the cycle in 2026, 2027. So is that maybe remind us how the cycles look for you? And is that still what you're looking for there?
Yeah, totally. So I track gold in an 11-year cycle, and dating back since 1970. And gold has had in all these years since 1973 major cycles that are 11-year cycles from 1970 to 1980, or 1981, and then from 2000 to 2011, 2012, and then from 2015 to now. And even though the 1980s rise was a lot more intense, less intense in 2011, and has been a little bit less intense this time, like the price action has been very similar. It's been a strong price action. And then, but usually at the 10th, 11th year, yes, which it's going to be sometime between now and next year, we usually see a peak and then a consolidation. And then what has happened in the past that we see also then a decline. That is not necessarily the case. The fundamentals this time are stronger, and it could be different this time. I mean, don't hang your hat on those 4 words, but it could be just because the fundamentals are so strong, and the narrative for a weaker dollar is so strong too. But like we gotta follow the charts, we gotta follow the technicals, the fundamentals, and and I'm following history because history rhymes.
Right. So this could be the top right now, and then we consolidate and go lower, or we could see another upward move. That's how you're seeing it right now.
Yeah. So for example, like I see like 39.50, like where gold right now today, is basically like holding after a very weak price action in the miners today. Like I think gold could probably fall to about 3,600. It has very strong support there. It's a very strong bull market support. And I think it's almost a given that gold will consolidate and reach that level, for me at least. Will it break below that level? It's harder to tell right now. Again, if the fundamentals of the bull markets remain, which seems like they are, it could just bottom there and continue its, magnificent rise. But if it breaks it, this could be the end of it also.
And so you're watching the dollar to get signals on what could be coming. Any other signals that you're keeping an eye on right now in terms of what direction we might go there?
Totally. For example, I feel that, the price of gold relative to everything else is very high. And when you look at charts throughout time and you see these ratios or these relationships between, say, gold and copper or gold and silver or gold and crude oil, usually when they reach the levels that they are right now, that has been, basically the catalyst for a reversal. And, will this time be different? Well, time will tell, right? We don't have a crystal ball. But, again, I'm in the side of history, and I think that, because the consolidation has been normal, I think like those other indicators are also telling me that maybe, gold has risen a little bit too much for its own good at this point. And, now we need other metals to maybe catch up before, gold could continue to appreciate.
Yeah, that's so interesting because talking about ratios, I hear a lot about the gold silver ratio, how it's so high, and that tells us that prices need to go further. But it could also mean no, they need to go lower.
Well, for example, it could mean the ratio basically means is that one stays stronger, one would be favored versus the other, and it could be that yes, they both rise. It could be they both rise, continue to rise, and then that would also make the ratio move lower if silver rises stronger. But also it could be that silver holds better than gold during a consolidation. Say if gold falls to 3,600 and silver holds around $47, $48, for example. Why would that happen? Well, because industrial resources are actually copper, and aluminum and the like, are steel, are due for they have been rising already, but I think they're due for a continued rise. And usually because silver is also an industrial metal, it also will move with industrial metals at sometimes. So because because we are seeing it is time for copper to shine, okay, in industrial metals, okay, that could tell me that push could help keep silver stronger than gold moving forward. And that doesn't necessarily mean that gold is also going to rise. It just means that silver could just hold where it is. And silver does this, throughout history, if you see, silver has amazing up moves and down moves, but then also it has also a lot of consolidation. And, we can't just get overly excited thinking that everything's going to shoot up to the moon, right?
Yeah. Well, this is very interesting because I've been asking people here at this conference. All right, so how should investors be positioning right now when it comes to gold and silver? And we've had a lot of talk of this is a buying opportunity, but for you, you're looking at it differently. So how would you say investors in precious metals should position right now?
Well, look, and this is the first time I'm doing this since the 2022 lows. Okay, so it's not something that happens all the time, but right now, what we've been doing is basically consolidating. I had a huge exposure to gold, huge. Like since last year, we really doubled down, and most of our portfolio was just basically gold, silver, and the miners. Now I've cut that a lot. I'm consolidating on the bigger names, the bigger senior producers that are more established, that have no debt, that have a bunch of cash, and the intermediates. I've been kind of consolidating exposure in the juniors, the ones that are the strongest, the ones that did the best for me. But I am letting go of some of the other more speculative side of that trade. And so not eliminating my exposure altogether, because again, yes, it could go up, but I have cut, at least a third of my holdings in gold. And right now I have cash, but I'm redeploying into other areas that I think are very cheap. For example, like copper, for example, like energy. Some of these very boring energy companies are Chevron, the Exxons, super cheap. And they get, and they're giving great dividends. And, I think there's something to be said about that. Same with the copper producers. There's a lot of copper companies in here that are great, and I think they offer a lot. And, I would be more looking into those companies to rotate out of a little bit, again, not completely, but rotate out of precious metals and into more the industrial resources, including silver.
Okay, and so for on the energy side, you said you're looking at the big names there. Is that the same for copper? Are you looking at the big producers or more like the smaller companies we've got over there?
It's interesting because this year, really, what has been producing from the industrial resources have been really the junior miners. It's interesting. The big miners, the BHPs, the Freeport McMorans, they are stuck in the mud a little bit, and they've had to deal with individual-ish things that happen within their minds and things that have affected, of course, but their rebound, their rise has not been nearly as strong as the juniors. So which is not necessarily very typical. Usually when the move starts, usually is with the more established companies, and then speculation goes into the juniors. But so yeah, I mean, I have some of the strong companies also in copper, but I am concentrating more on the junior side of the coppers, of the industrials.
Well, and maybe you can say more about your outlook for the copper price, what you're seeing in the charts, because I feel like I've heard for a long time, many people are bullish on copper, but they're saying, well, it's going to be in the future. It's a long-term story. So what do you see coming?
Well, no, yeah, I mean, I think the future is now. And I do believe that like copper is a transition metal. Like it's a key metal for electrification, for for our world today. We definitely need copper. We need silver. We need a lot of these metals. So um, and that's why I think like they're it's their time to shine.
Yeah.
We're at that moment.
Well, and similar question on the direction of oil prices, because one thing I've heard come up a few times here is people talking about how rising oil prices could affect costs for miners. So, what are you expecting for oil?
Well, so oil right now is at $60, and that's pretty much like the cost of production, and that's why one of the things that I really like about the energy companies is that as cheap as oil is right now, like you have these big companies super profitable still. Like they have great balance sheets. They have, they hire very little debt. They have great assets. They have great management, proven and tested. They've been there. So, I mean, if you see the price of oil break out a little bit, and, like if it breaks out, say, $63, which is right there, it could probably rise to about 76, which is its next strong resistance. And that $10, the price alone, could be super explosive, even for the senior energy companies that have been so bummed out for the past 3 years.
I think we've taken a pretty good look at what you're looking at in the commodity space. If we take a step back, I think especially at this event, we hear a lot of concerns about the broader stock market and what could be coming there. Do you look at that? What are you seeing coming there in terms of do we need to have a correction there as well? Something bigger than that?
Well, I mean, I think maybe pockets of the stock market. I do believe, for example, there are sections that are going to be strong. Like for example, with industrials, I think it's time for them to shine. Going back to energy, of course, but I do believe, for example, like AI, the AI hype. Like I'm not saying anything new to you, of course. Probably you've heard it from everybody, but it is what it is, right? And I think that hype, is going to take a toll. And I think that initially, the knee jerk reaction of any pullback in AI, you could bring down also like some uranium stocks, some transitional metals initially. I don't think that they will derail that bull market, but it could scare some people away initially. But I think that's the hype. You have pockets. Like an AI and quantum. I think are two of those pockets that are just like um, a lot of money, like a lot of crazy money is being thrown at them, and when you see, for example, the past, like when the internet happened, like a lot of companies back then laid the groundwork so that we could have the connectivity and everything. But most of those companies that laid that groundwork went belly up. They never made money. They spent billions or maybe millions. This is a long time ago. Now with AI is the same thing. Like all these companies are throwing billions of dollars to this, and it's like, well, is it really going to be? Are they really going to recover that money? I think I think it's not such an easy answer.
Well, and talking a little bit more about risk, you reminded me at the beginning of this conversation last year, the biggest risk for you was not to be involved in the precious metal space. So if we look at right now, what do you think is the biggest risk for investors?
Not being in the energy space.
And would you extend that beyond? So we mentioned oil. Would you extend that? Or sorry, yeah, we mentioned oil. Would you extend that beyond?
Yes, totally. I think definitely uranium.
Okay.
Like even last year, we were bullish on uranium and it's had a great year. And like I don't think that's over. I think like uranium and nuclear energy has a lot of room in our society, and I think it's gonna continue to grow as a viable source, for sure.
Yeah.
So yeah, I like uranium a lot. Uranium and oil.
Yeah, and I'll ask you, same for uranium. It's a little bit different because there aren't really a ton of large companies there. So for you, what would be your favorite way to approach that?
Well, so it all depends on your risk profile, right? And how much risk you want to, But here there's, like a lot of like the smaller producers that are in North America, in the U.S., because of what's going on worldwide geopolitically, and this push that like, well, of course, coming from Trump in the U.S., but different parts of the world where countries are starting to look back at their backyards and saying like, what, we should produce this stuff. Let's not just depend on others to produce it. We should do it. And I think that push is there's a push towards developing more energy in different ways. Crude oil, also uranium. There's gonna be a lot of incentives for this. So you're starting to see like some of the small companies that are based in the U.S. that are gonna be receiving these incentives and this love from the government. I think that's a great opportunity. I mean, if you're more adverse to risk, then you might want to look into like an ETF that combines maybe like some of the bigger names with some of the newer names. One of the companies that I really like, unfortunately, is not here in not lately. It's not this year, but it's Next Gen Energy. It's a Canadian company, great company. They do things right and they're profitable and they're amazing. They've done great for us. But here it says, what's it called? I was just looking at somebody here. I forget their name, but there's several uranium companies here that are in the right jurisdiction, which is in North America, whether that's Canada or the U.S. Even though Canada and the U.S. have their little thing, I think that's just more short term than anything. I mean, Canada and the U.S. will always be friends, right?
Well, and you make the point about so the US has decided we want to do this. The US government wants a lot of things right now going into critical minerals and places like that. Is that a space you would consider critical minerals, or you want to stick with the energy side?
Also, totally, absolutely. Critical minerals. I also talk about them as transition minerals, right? Because they are these metals that are so important for us to go, for society to do what it wants to do with electrification, with all different things. Yeah, so absolutely. I think the critical minerals, like are part of this energy boom. Absolutely. And
Would you pull out any in particular that you're watching right now?
well, so right now the what I have is actually like it's actually really nice ETF. It's a Sprott product. It's SETM is the ticker, and the reason I like it is because it has about 10 different companies that are all an important part of this energy transition of critical minerals, right? So that there's nickel producers, there's silver producers, there's copper, there's also uranium, there's others, right? So there an ETF that encompasses like really good solid companies within North America that are producing, or in the process of producing these critical minerals, and it's like a basket, because really there's not one company that just produces everything, right? You kind of have to get a plurality if you really wanna like go into the space, and be able to like get benefited from all the different subsectors and spaces. You need to have like a basket more than just one or two companies, right?
Yeah, that's exactly why I asked, because I think it can be a struggle to figure out which one do I choose, because there's so many different ways you can go. So, okay, that's a great way to do it that people can look into. All right, as we're getting toward the end here, I'll give you my fun question that I've been trying to ask everybody here, which is, if we look at 2026, what would be your pick for top performing asset of the year?
Okay, so it's a good question. I think something related in the industrial metal space with copper specifically. I think we could see copper. Usually in the cycles, like after gold, copper follows. It's just that's just the way that it is. And as and that could be as a rotation, from safety more to industrial. So I see probably the bigger performers are going to be in that. And also the energies. The thing is that with the energy, like there's obviously a very strong policy from the U.S. To try to keep energy prices low, and and that could take a little bit longer than next year. But if say for the next 2 years, within 2 years, I think like the energy space is going to be really great. But for next year, I think more imminent, I think copper.
Okay. All right, well, we'll be checking back with you next year when we're here, I'm sure. Any final thoughts you'd leave investors with before I send you back out onto the show floor?
Well, I mean, next year, come to the New Orleans Investment Conference. Like you definitely get like so much information, like not only from the speakers, but from the exhibitors themselves. Like what's going on in their industries. Like you get to know like a lot of these companies and have more of it's part of the due diligence that I think it's important. Just getting to know the people that are behind. And do your homework. Like I think like there's a lot of really good recommendations from a lot of people, but you got to do your own homework. Don't take anything for granted. Take a diversified approach to things. We are in a moment where a lot of assets have risen a lot, and we could be like a lot of people are saying. I'm just not into that camp, but a lot of people are thinking there could be like an everything bubble type of thing that could burst, and so like be diversified. Take things with a grain of salt. Do your homework.
Well, nice way to wrap up. Thank you so much for coming on to talk. Great to have you.
My pleasure. Thank you, Charlotte.
Okay. And once again, I'm Charlotte McLeod with investingnews.com, and this is Omar Ayales.